Friends, myself Subrata Mukherjee, and today I will discuss a problem on admission in partnership accounts.
Balance sheet of Arup and Barin as on 31st December 2019 is given below. On liability side, Arup's capital 8,000, Barin's capital 6,000, general reserve 4,800, Sunday creditors 3,200. On asset side, freehold properties 4,000, furniture 1,200, stock 2,400, Sunday debtors 12,000, cash 2,400, both side total 22,000. They agree to admit Tarun as a partner into the firm subject to the following terms and conditions. Tarun will bring rupees 4,200, of which 1,800 will be treated as a premium for his share of goodwill to be retained in the business. He will be entitled to 1/6 share of the profit or loss of the business as against Arup and Barin, who used to share profits and losses in the ratio of 3:2. 50% of the reserve is to be converted into a provision for bad and doubtful debts. Depreciation is to be provided on furniture at 6%. Stock is to be revalued at rupees 2,100. Prepare necessary ledgers and the opening balance sheet of the new partnership. This account problem, we will prepare the revaluation account first. So we have to charge depreciation. So to furniture account. So 6% of 1,200 is rupees 72, and there is a reduction in the value of stock by rupees 300. So by partners capital account, the loss on revaluation is 372. So that will be shared between Arup and Barin in 3/5 into 372 is 223, and 2/5 into 372 is 149. So 372 is the loss on revaluation. Next, we need to prepare the sacrificing ratio, or we have to find out the sacrificing ratio. So the three partners are Arup, Barin and Tarun. So Tarun is the new partner. So old PL ratio is 3:2 and the new PL ratio we have to calculate. So in the new PL ratio, Tarun is given 1/6 share. So the remaining share is 1 minus 1/6 is 5/6. So Arup will take or will have 3/5 of 5/6 is 3/6, and Barin 2/5 of 5/6 is 2/6. So the new PL ratio will be 3:2:1. Now what will be the sacrificing ratio? Sacrificing ratio is the old ratio minus new ratio. So old PL ratio and the new PL ratio. So for Arup, this is 3/5 minus 3/6, and for Barin this is 2/5 minus 2/6. So if we take LCM as 30, so this will be 18 minus 15, or 3/30, and this will be 12 minus 10, or 2/30. So 3:2 is the sacrificing ratio between Arup and Barin. Now Tarun brings 4,200 rupees to the firm. So out of which 1,800 is towards the premium for goodwill. So what will be the journal entry? I will show you the journal entry first. So cash account, cash or bank account debit, this is 4000 minus 1800. So this is basically 2400 to Tarun's capital account. Tarun's capital account 2400, and the amount of 1800 that is brought towards premium for goodwill will be taken away by Arup and Barin in their sacrificing ratio. So cash account debit 1800 to Arup's capital account and to Barin capital account. Now this 1800 will be shared between Arup and Barin in sacrificing ratio. Since the new partner is able to bring cash towards the premium for goodwill, so this amount will be shared in sacrificing ratio as 3:2. So the amount will be 1080 and 720. So now we will prepare the partner's capital account. On the debit side, I have written the name of the three partner as well as on the credit side. So to buy balance BD, the opening balance of capital of Arup and Barin is 8000 and 6000. So by cash, Tarun brought 2400 as his capital, and the amount of goodwill, Tarun's share, that is 1800, which will be taken by Arup and Barin as 1080 and 720. Next is the general reserve. So general reserve 50% will be converted in for bad and doubtful debt, and the 50% will be taken away. So by general reserve, so 50% of general reserve is 2400 will be shared. So 2400 will be shared between Arup and Barin in 3:2. So 1440 and 960. So I have shared 2400 in 3:2. So 3 by 5, this is just for your calculation, I am showing it here. 3 by 5 into 2400, and this is 2 by 5 into 2400. I am showing this as your working. So I will just remove it from here. And on the debit side, you have two revaluation account. There is a loss on revaluation account 223 and 149. So to balance CD, this will be your closing capital 10,297, 7,531 and 2,400. So both side total. So this is 2,400, 2,400, 7,680 and 10,520. So this is your partner's capital account. So now we will prepare the balance sheet of the new firm, that is on 31st December 2019. So on liability side and on asset side. So on the asset side, first is the freehold property. This is for 4,000 rupees. Then furniture, 1200 minus 72 is 1128. Then stock earlier was 2400, but it is revalued at 2100. Debtors 12,000 and cash 2400 plus this is your figure which is given in the balance sheet, and plus 4200 which is brought by Tarun, so 6600. And on the liability side, capital Arup 10,297, Barin 7,531, Tarun 2,400, sundry creditors 3,200, and provision for doubtful debt. So 50% of general reserve is converted into provision for doubtful debt. So this is 2,400. So both side total will be 25,828. 25,828.
Hope you have understood the problem. I request my viewer to subscribe my channel to get regular update and to see the playlist section of the channel to see the videos that I have uploaded earlier. Thank you.